So inflation down in December for 18 months. What's led to that?
Yeah, I think we've been witnessing a narrowing of the corridor on the inflation figures since the past few months. And, that has in fact prompted the Bank of Mauritius recently to drop down the repo rate. And I think we are now witnessing the first dip in the past 18 months. And it's basically showing us that there is a peak now. And this is the first dip that we are showing from 6.6 to 6.5%.
Explain to me the variables, because in general we're told that food prices and utility costs have been constant. There have been some decline in beverages, both on the non-alcoholic side and the alcoholic side. So not much has really changed fundamentally, but what are the variables informing this figure?
Yeah, I think what we are seeing is that the main contributors to the change in the index between November and December were primarily due to the food, segments of the index, and we've seen that the prices of food and non-alcoholic drinks were unchanged in December from a month earlier, and again for utility gas and oil fuel costs. On the alcoholic beverages and tobacco, prices decreased by 0.7%. month on month, and also followed by furnishings and household equipment, which fell by 0.8%.
How is Mauritius going to be impacted by the potential of a strengthening dollar? Because the rupee tends to track the euro, and we know that there's a lot of uncertainty as to what we're going to see coming out of Europe.
Yeah, definitely. I think that will have an impact. We need to be cautious about that. And because we are a net importer of products in Mauritius, and our imports are mainly dollar-based, so that could have an impact on the figures going forward, and we need to be watchful over that, especially in the weakening eurozone.
All right. So in terms of the central bank and what they are able to do they have room to maneuver? Because there are calls that it's time for the central bank to start decreasing rates.
Yeah, definitely. I think that has already been witnessed in the recent review of the repo rate, and the 10 bips drop was in the expectations that figures on inflation were narrowing, and that has been confirmed, which basically shows that the room for any review of the interest rates could be further supported, especially in the context of what we are seeing in the euro and the potential impact on the growth of the economy.
Give us a sense of how local investors feel about the state of the economy, because some of the variables or the factors that have informed the central bank were the business confidence index, where generally businesses are not very encouraged about the general operating environment in Mauritius at the moment, the costs just rising obviously.
Yeah, I think the main concerns are regards the exports, and our main markets are in the eurozone, and that is definitely causing some concerns over potential growth figures, from 4.2 to probably 4% next year, and that is actually the main factor affecting business confidence and in investments in productive sectors. So definitely, any easing from the central bank could lead to some optimism in the business confidence and any potential investment there.